Show. The market's not looking as bad, actually. We did see a gap down opening. There was a little bit of panic in trade yesterday, but things are settling down. The Nifty is very close to turning back into the green, but we'll take you through that and more on the F&O Show. But first up, a quick check of the top headlines that we track. It is a choppy Thursday for the markets as we trade around 21,000 on the Nifty. The Sensex still trading sub 71,000. Banks trade slightly lower. After starting the day marginally in the red, auto, metals and tech index reverses losses while media continues to trade in the green. And Z Entertainment jumps over 5% on possible deal extension. This comes after Sony said yes for the discussion. And shipping stocks in focus, Mazgaon Docks and Cochin Shipyard rally on order wins from Ministry of Defence fuels optimism. And it's a blockbuster debut for Inox India. The stock listed a premium of 44% on the NSE. We'll talk to the management of Inox India in just a few minutes to understand the business and the risk involved. Well, that's of course the top headlines we are tracking. The markets, like we said, aren't looking as bad as they did when we opened for trade this morning. The Nifty and the Sensex trading marginally lower, but no concerns just yet. The bears pretty much trending on thin ice for now. That is where the Nifty is 70 points off, 0.4% down. So pretty much at the day's high point, you can very obviously see a recovery that could be playing out over the next few hours. Broader markets, a quick check. The mid and the small cap index also trading better than where it was when the day started off. Was at the day's high point a few minutes ago, but still not looking too bad on the broader markets, trading in line with the benchmark. Media is in the green. Couple of sectors have reversed their losses. Companies like ONGC and oil on back of high crude prices trade firm. Z, Nazara, a couple of counters from the media pack that are looking good. Agam, this was very, very shallow. We were calling this profit booking or a correction. Up until yesterday, there was panic. But this morning, I think the bulls have gone home, taken stock, and actually come back.
Yeah, so based on technical definitions, this was certainly not considered a correction. That's it.
Right?
Or panic for that matter, absolutely. And, well, of course, given the kind of sharp gash that we saw in the indices yesterday, I reckon that at least some traders out there would have thought that it's time to take profits off the table, and which is why we're seeing about a short covering, and that's indicated by the decline of 10% in open interest as far as this index is concerned as well. I know, yes, the Nifty is in the red, but it has recovered considerably from day's lows. That said, the day is still yet to pan out, so you never know how volatility could in fact pan out with respect to the Nifty. Coming down the bank Nifty as well, we're not seeing too much change, but we didn't see too much change yesterday either as far as your index futures go. And well, we are looking at the bank Nifty once again testing the mark of 47,000 on an intraday basis. It is going to be all about the Nifty weekly options expiry. So based on that, we are of course going to continue to see a lot more resistance around 21,500 at the moment, but it is all going to be about the fight of 21,000. That's where we are seeing the most amount of action. Let's talk about the change in open interest then, and that's where you will see, as I was suggesting, a lot more activity around and associated around the 21,000 mark. Calls and puts being written out there. It's a wait and watch as to who wins at the end of the day. But for now, the Nifty is managing to defend 21,000, and it's going to be a wait and watch whether or not we in fact do close finally towards the end of the session around and over that. Let's talk about stocks then, and of course we keep an eye on something like a Coforge and Dalmia Bharat, which continue to be under pressure with fresh shorts building there. But on the other hand, Britannia, Colgate and Innocent Bank looking at fresh longs. And in terms of those stocks which are seeing unwinding, let's pull that up as well, where we have open interest declines. So we do have longs unwinding in India Cement and Voltas. Voltas has had a particularly sharp uprun over the past few days. And of course, Exide PI Industries and Coromandel International looking at about a short covering. It's a mixed day of trade. There is a little bit of positive, there's a few positive takeaways as far as early morning trades concerned. It's the question really is, are we headed for a sharp bout of short covering, or can we expect the markets to consolidate? That's a wait and watch, Samina.
Indeed. Whether we consolidate further, remember we are going into a long weekend for global markets. You've got Christmas on the 25th, which is Monday. You've got Boxing Day on the 26th. So we're assuming globally as well, traders and investors would not want to carry very heavy long positions. close into that weekend. Here, of course, on Thursday, the close will be critical, but global cues aren't giving us support this morning. That's what you want to keep in mind as well. So, and a quick mention on a couple of movers. Agam's pretty much highlighted everything that's active in the markets, but IRCTC, that stock is doing quite well. It's up about 4%. Nazara Technologies, on back of the Z-Sony news, is trading positive. That counter also trading with a gain of about 4%. There you go. Nazara is off the day's high point, but still looking good. Z Entertainment up 4%. Ami Organics is a pretty large, pretty solid company, but there was a block deal where there was 12% stake changed hands. The counter is under pressure, but not looking terribly weak, down about 2.5%, way off the day's low point. You've got stocks like Tata Power, Power Grid, IOC, Reliance Industries that have all now turned into the green. Well, we have with us two very special guests joining in to talk to us about their market strategies for the day. We have with us Nilesh Jain, who joins in. He's head AVP Technical and Derivative Research of Centrum Broking, and Akshay Bhagwa, Senior VP GM Financial Senior VP GM Financial Services. Nilesh, I'll come to you first. Yesterday, the street was looking very nervous because of the big cut that we saw, not just on the index, but the broader markets looked much weaker. Of course, we shouldn't forget that when we were going up, the rally was very sharp. So when we, of course, consolidated or declined yesterday, it was pretty much in line with the way we were moving up. But the gap down today is getting bought into as we speak. Would you consider initiating fresh long positions here if you were a long trader? And if you were short on the market, would you cover your shorts here?
Morning, Samina, and everyone. So if you look at the entire run-up that we saw in last 1.5 months, from the levels of 18,800 to almost 21,500, if we take the retracement of this entire run-up, then 23.6% retracement, that comes around 20,950. And exactly near about those levels, today we have witnessed some amount of buying interest coming in. So looking at the overall setup, I think any dip towards 20,900, 2950 may provide a good opportunity to add a fresh long for a pullback trade. And for a pullback to continue towards 21,200, that's the immediate level that we are eyeing on. Today we have a weekly F&O expiry, and even if you look at the derivative data, so 21,000 on the put side has the highest OI concentration. At the same time, if you look at 21,200 call option, there as well we are witnessing highest OI build-up. So that's the 200-point trading range for the day. In the coming truncated week, we have a monthly F&O expiry, so the range is slightly wider. So 20,800 to 21,400. So that could be a 600-point trading range for the Nifty. I would be still on a buy side, and I would wait for some dip towards 20,900 to make a fresh long side entry.
All right. Akshay, if you can come in on that, good morning to you as well. How are you viewing the Nifty at the moment, and how are you trading it?
Good morning, Agam. Thanks for having me on the show. Well, today is the weekly expiry for the Nifty indices. And one thing was Nifty did hit its brakes, and it really did hit hard yesterday. 21,000 is a very important level, as I understand, considering the strong open interest build-up in put writing. So my belief is that for today's day trading session, 21,000 would hold on. That's a very strong support base. One important thing which I found out in yesterday's data piece was that in all the mayhem and the sell-off which we saw yesterday, the FIIs largely were buyers in index futures, both in index and the stock futures. So that's a very positive data piece for me. So I believe now the market is possibly looking for a bottom somewhere in the range of 20,900 to 21,000 zone. So my approach to the index would be, I would be looking for buy opportunities, especially if I'm searching for a weekly expiry trade. I would like to reinitiate my buy position for today once I get Nifty around the levels of 21025 to 21050 in that range. I'll keep a stop loss below 21,000, and I will slightly target a bump up till the 21,100 to 150 level. So I maintain a positive view for short-term trading. Things will be volatile, but expecting things to stabilize and sanity to return back in the market.
Nilesh, what is your trade on Bank Nifty?
So I have a similar view for the Bank Nifty as well, although today it is relatively underperforming compared to the Nifty. But if you look at the support zone, that is still placed somewhere around 47,000. So that is acting as a psychological support zone. And even if you look at the monthly F&O expiry data for the Bank Nifty, where we are witnessing fresh put writing at 47,000. So that is a make or break level on immediate basis. We expect a pullback from here. And if at all Bank Nifty closes in the spot levels above 47,200, that would be considered as a positive close. And it looks like it is forming a doji candle on the daily time frame chart. So yes, at current level, the risk and reward looks favorable to make a long entry, and upside we expect further move to continue towards 47,400 to 47,600. That could be the immediate target for the Bank Nifty in the spot level. Stop loss should be placed on the closing basis below 47,000.
We've been talking about 21,000 put at the moment, and over the course of the last half an hour, we have seen the open interest double to around 3.1 crore shares at the moment as we speak. So it does certainly seem like the markets at the moment are betting against the Nifty closing below that mark. Now, the question is that if we are not going to close about 21,000, where are we going to close? If we are going to close about 21,000, where is it that we could in fact see, that closure coming through? Now, we must also take into consideration that going into the next few days, we're expecting the volumes to starting to thin out, because as we move into the holiday season, we're likely to see less traders active. That said, for now, it does seem like the major moves on the indices are behind us, and the question is, can we expect about a consolidation? But with that, Nilesh, I'd like to take your view as far as the IT index is concerned. That's up and about, and it's perhaps provided a little bit of support over the previous couple of sessions to the Nifty, even when we did see the sharp drawdown yesterday. What's your view on this particular index, and perhaps a few names if you wanted to talk to us about?
Right, Agam. So if you look at the Nifty IT index, we have already seen a good breakout from the levels of somewhere around 33,500 in a few trading sessions back. And the structure is still looking strong, and we expect further move to continue. Although from the high level, some profit booking was seen in last couple of trading sessions, but that is again giving a good opportunity to make a fresh entry on the long side. So for Nifty IT index, the support is at 34,300. And we expect further upside move to continue towards 35,500 to 36,000. So within this space, we are liking index heavyweight TCS. That would be our first preferred bet within IT space. So for TCS, upside is open up for 3,900. Stop loss should be placed below 3720. And another mid-cap IT name that we are liking is LTIM The structure is looking very strong. Constantly, we are witnessing a high top and high bottom formation. And on the upside, the target on immediate basis that comes around 6,300 to 6,500. Stop loss should be placed on the closing basis below 6,000.
Right. Akshay, stock picks, any trades on either sides?
First pick is State Bank of India from the banking segment. If you look at the recent rally in the banking, especially the PSU banking space, State Bank was one stock which clearly hogged the limelight. A strong technical breakout which we saw at the levels of 625 to 630 zones a couple of trading sessions back. And yesterday's profit booking gives us another opportunity to re-enter at the support zones. So the derivative setup is also positive. Some minor unwinding yesterday. Technically, it is very sound and strong. So I would consider buying State Bank at the current rates. I would keep a target till 6,651 on a short-term basis with a stop loss of 620. The another stock I would recommend here is IRCTC. The stock is in the limelight today. It was in the limelight a couple of trading sessions back. A very strong chart structure, a powerful breakout of over 10% move in a single day a couple of trading days back. Long additions intact in the derivative segment. 800, 820 is the support base, and I'm expecting this stock to revisit the recent swing high of 900 plus very soon. So consider buying IRCTC. It's more of a trading target which I'm giving you. The target would be around 877. You can even extend this if it goes in your favor till 890 to 900. Keep a stop loss of 820 on this buy trade.
Nilesh, very quickly, you've already highlighted a few stocks that you like, but any other trades, your top trades that you're recommending on?
Right, Samina. So as I mentioned, the outlook for Nifty and Bank Nifty both are looking positive on immediate basis. Bank Nifty specifically, we expect it to move towards 47,500. Reason being, index heavyweight HDFC Bank. Yesterday as well, we saw some amount of participation from this index heavyweight. So HDFC Bank is on the verge of a major breakout. Breakout level is placed at somewhere around 1670, and we expect this breakout on immediate basis. And HDFC Bank on immediate basis, the target comes around 1701. So that would be the immediate target. One can buy HDFC Bank at current level, keeping stop loss below 1645. So these are the spot levels. And other stock that we are liking is Voltas. In last couple of trading sessions, we have witnessed good momentum in this particular counter. Yesterday, we saw some cool off on the back of profit taking, but again, it looks like it is getting ready to move towards 960 to 980 sort of target on immediate basis. The immediate target we expect would be of 970. Stop loss should be placed somewhere at the today's low near about 960.
Right. Well, Nilesh and Akshay, we leave it at that. Thank you so much for joining us and taking us through your views on the markets and also giving us a handful of trading ideas. We continue to keep an eye on the markets, but on that note, going to slip into a short break. On the other side, we talk about stocks and a lot more. Stay tuned in.
The markets are trading flat. We're off the day's high point, but not at the day's low point either. So it's a morning of consolidation. No surprises there. We have with us a very special guest. It's been a fantastic listing as Inox India debuted on the exchanges today. Siddharth Jain, promoter and non-executive director of Inox India, joins in. Siddharth, good morning. Congratulations. You are one of a kind on the exchanges. The response has been phenomenal. Of course, it was oversubscribed, the OFS. The listing came with gains of over 45% odd. Pleased, to say the least?
Well, first of all, good morning to you and your viewers. I think pleased is an understatement. We are ecstatic. Entire management team. It's such an emotional day for all of us. Coming of age for our company. And what we make in India, we make for the world. Very proud of our product. And we are deeply, deeply humbled by the level of interest shown by the investors. Over 42 lakh applications. I'm told it's a top few of this year, and top few, in fact, in the history of the Indian stock exchanges in terms of the interest. So we now have to live up to the expectation, and we are certainly enthused to do that.
Siddharth, to say the least, every report, and I mean every brokerage report that came out when this was happening, has got a buy call on it. So if you have to take any heart from that, the euphoria is very obviously felt. I was doing a little bit of a SWOT analysis, right, trying to figure out what our conversation should be about, and all we could see was strengths. The threats and the weakness we need to understand from you. But let's start by talking about business, right? You operate in three segments, to be precise: industrial gas, LNG, and cryo-scientific. Break that down for us in terms of an outlook. How much does each vertical contribute to top line, and what is that expected to grow to as we go along? I know we don't have too much peer comparison because, like I said, you're the only person in this business in the listed space.
Yeah. So I'll give a quick briefing to your audience on what is it that our company does. We are in the business of making cryogenic equipment. Cryogenic is any fluid which is colder than minus 100 degrees centigrade till minus 270 degrees centigrade. And the easiest way to understand this, as I've said on other platforms as well, is you take these, what everyone has seen, the medical oxygen tanks in a hospital, and what's inside that tank is, liquid oxygen at minus 183 degrees centigrade, but outside is ambient temperature, and you don't see any frosting on that tank. Well, that's the technology. The heart of the technology is how do you keep very cold things extremely cold all the time without any external refrigeration. Now, we've been in this business for over 30 years, and we export almost half of our revenue to over 60 countries. We have a very large position in India. And the main aim of this listing is, our customer base. We have a lot of Fortune 500 companies as our customer base in the industrial gases, LNG, and cryoscientific verticals. And we want to gain visibility for our company, for our product. We have a AAA gold standard product, and we really want to take it to every corner of the world. In terms of the three verticals, industrial gases primarily refers to the traditional ones like oxygen, nitrogen, and argon. The new age clean energy vertical in that is hydrogen. We have recently supplied the baseload storage tanks for the world's largest liquid hydrogen plant coming up in South Korea. Extremely prestigious project for us, extremely prestigious project for our country, that, we've been selected to supply this extremely critical equipment for this clean energy plant coming up in South Korea. The second vertical, LNG. LNG is a transition fuel of clean energy. It is the lowest CO2 emitting fossil fuel, and we supply all the equipment for the supply chain, from storage, transportation, distribution, regasification. So, and we supply LNG equipment all over the world. What's different about our company is that we have the IP that begins from the design, engineering, fabrication, and at times even the operations of these units. The third vertical, which is cryoscientific, our marquee customers, of course, are ISRO, and the launch pad that has been made in Sriharikota, launch pad 2, from where all the rockets get launched. Inox India had a very, very large role to play in the early 2000s when we constructed that entire launch pad. Similarly, with that experience, we've been now selling equipment to other some of the largest private space agencies in the world. So it is indeed a very unique business of, and as you rightly said, no listed peers in India. There are some globally, and we hope to definitely become the largest player in the world one day.
Right. Siddharth, could you give us an idea about the kind of growth rates that this industry is seeing, that at least as far as globally is concerned? I know that I reckon that a lot of the developed nations will already have a very well-established, industry when it comes to the kind of business that you're in. And you being one of a kind in India, with respect to the global growth, what sort of growth can we expect from you, say, over the span of the next 3 years?
So over the past 7 years, we've been growing at about 20% a year, a little over that. And we see enough visibility that we should be able to continue the same trend going forward. Our product is a capex related product, and it's connected to global capex. The new applications of cryogenic tanks, as I mentioned earlier, was to do with hydrogen and LNG and the cryoscientific division. As we see the consumption of these green fuels going forward, we never know where the market can take us. But I think we're in a very strong foundation with great opportunities in front of us, and we've developed a very strong reputation. And with this listing, I hope it's going to help us get even more global business going forward.
From what I'm seeing, your order book currently stands at about 1,000 odd crores. Going forward, considering the kind of pipeline that you guys have in terms of your orders, do you think that your revenue mix, I believe about 2/3 comes from industrial gases and about another third comes from LNG. Do you think this revenue mix could perhaps change? Perhaps you could be getting more from industrial gases, considering you guys are already focusing on green hydrogen?
Well, I certainly see the adoption of LNG as a transition clean energy fuel, increasing year by year. And but we also see great demand for our cryoscientific division. We are one of the largest suppliers of mission critical helium equipment to the ITER project, which is the global fusion project happening in France. So it's difficult to say which one of the divisions would actually grow faster, but consider the three divisions as three children. You can't choose your favorites. We hope all of them outperform each other.
Siddharth, I want to talk about the business and your margins a little bit. First, this quarter margins have improved in this half to closer to 23.5 from 21 odd percent. What is the outlook going ahead? Can we expect Inox India to maintain margins in this range? If you can help me understand that, and also what would be a threat? Because I know raw material costs could be something that could squeeze margins or impact margins.
So our margins have been fairly consistent in the low 20s for the past number of years. And, we are constant endeavors to improve it. And we have been trying, as you mentioned, in the first half of this year, the margins were slightly higher. We hope to close the year as well at similar margins as what we've done in H1. So, in terms of raw material costs, as I mentioned earlier, we are a CapEx-driven product, which means that by the time we deliver our tank, we have a standard and a non-standard tank division. Our standard tanks we deliver in 4 to 5 months, and non-standard anywhere from 6 to 12 months based on the project. We only buy a raw material after we get the order. So, we have no issues in passing raw material costs. They're always, our sales are priced taking into account the raw material cost at that point in time.
Oh. I wish we could talk to you longer, but another quick question that I have for you is, I know you had recently made an acquisition some time ago. Any other acquisitions on the anvil? Anything that we could be expecting in terms of big bang announcements from the company?
Well, we don't shy away from inorganic growth at all. We do enjoy it. Whenever we are constantly evaluating options, both domestically and internationally, and you'll certainly be the first ones to know when we do announce it.
Forward to that. Congratulations, good luck, exciting, very exciting times ahead for you. The company, Inox India, let's quickly pull that up on the screen and see what it's doing. It had opened with a gain of 43%, eased off just a little bit, but Agam still deeply in the green, 36% on a day when the markets aren't looking great.
Yeah, absolutely. Well, of course, and we're keeping an eye on plenty of other listings coming through. It's the final week of December, but it doesn't seem like that, at least as far as IPOs go. We'll continue to keep an eye on that one. But on that note, we've completely run out of time on the show. Thank you for watching the F&O Show. Lots more lined up. Stay tuned to NDTV Profit.